Prime Minister Datuk Seri Ismail Sabri Yaakob tabled today the 12th Malaysia Plan or 12th MP, aimed at resetting the economy post-COVID-19 and building a prosperous, inclusive and sustainable nation. The new plan comprises 9 main areas of focus, with 400 billion ringgit allocated for development expenditure. This blueprint, he said, will put the economy back on track and steer Malaysia towards becoming a high-income nation and provide its citizens with a better quality of life by 2025, with average household income reaching 10,000 ringgit per month. Annual economic growth is targeted to average 4.5% to 5.5%, and priority will be given to narrowing the development gap between the central region and less developed states. Putrajaya will also build reliable infrastructure and an ecosystem to attract quality foreign investments, as well as one that will support the domestic gig economy. Measures for the B40 and M40 segments include the building of 500,000 more affordable homes, while financing facilities for housing will be improved. Malaysia also aims to be carbon neutral as early as 2050, with carbon pricing and a carbon tax to be introduced. The 12th MP was supposed to be tabled last August. It was postponed due to the COVID-19 pandemic. Malaysia's daily number of new COVID-19 cases dropped sharply to 10,959 today from 13,104 on Sunday. According to Health DG Tan Sri Dr. Noor Hisham Abdullah, this was helped by, among others, a decline in fresh infection figures to below 1,000 in Selangor and Sabah. The cumulative number of infections now stands at 2.209 million. Selangor reported 979 new cases today from 1,558, while the figure in Sabah dropped to 751 from 1,078. Elsewhere, Sarawak logged the highest number of new cases with 2,723, although the figure was down from 2,943, while fresh infections in Johor fell to 1,226 from 1,455. The daily number of new COVID-19 cases in Malaysia's 3 federal territories also dropped. Labuan offered a notable update with 0 fresh cases compared with 4 yesterday. Kuala Lumpur recorded 176 cases, down from 270, while the number for Putrajaya was lower at 18 fresh infections versus 34 yesterday. Axiata Group said its subsidiary Axiata Investments Indonesia is selling a 5% stake in Indonesia-listed arm XL Axiata to Ferrymount Investments for 1.44 trillion rupiah, that's 423.5 million ringgit, or 2,700 rupiah, that's 79 cents per share. The sale and purchase agreement was inked between XL Axiata, Ferrymount and ProCap Partners and Tiga Investments, which are acting as guarantors. Axiata said the principals of ProCap and Tiga have extensive knowledge, experience, business partnerships and investments in Indonesia, as well as in global capital markets, so the deal, which comes with a call option, will place XL Axiata on a better operational footing in the near future. Separately, Axiata has offered 885,600 of its shares to its president and group CEO Datuk Muhammad Izzaddin Idris under the company's first share vesting scheme since he was redesignated group CEO on January 1st, 2021 from his previous position as deputy CEO. In filings with Bursa Malaysia last Friday, Axiata said the offer comprises an initial base grant tranche of 442,800 shares that may vest upon Muhammad Izzaddin meeting individual performance targets and helping Axiata meet certain financial targets. It said the base grant is nil if targets are not met, and up to an additional total of 442,800 shares if the super stretched individual performance performance and group performance targets are met at the point of vesting. The shares offered to Muhammad Izzadin at 4 ringgit 9 sen under the restricted share offer are expected to vest over a 3-year period from the acceptance date of the scheme. At the close, Axiata's share price settled down 1.47% at 4 ringgit 3 sen for a market value of about 36.96 billion ringgit. AirAsia X or AAX, which is in the midst of its debt restructuring exercise, booked a net loss of 24.63 billion ringgit for the April to June quarter on provision for the amount payable to creditors. AAX said it made a provision of 23.7 billion ringgit for the amount payable to creditors where the company is in default under the terms of the contract. The carrier said that it should be highlighted that the contractual liabilities for which the provision is made will be waived upon a successful completion of the proposed debt restructuring exercise. AAX is in the midst of restructuring 63.5 billion ringgit of debts to unsecured creditors to be reconstituted into an acknowledgement of indebtedness by the carrier for a principal amount of up to 200 million ringgit. It has received an extension until March 2022 for the restraining order on 15 of its creditors over the restructuring and to convene a creditors meeting with an order to report back to the High Court on the progress in mid-December. It said it continues to make good progress in talks with its creditors and hopes to hold the meeting by the end of next month. Minus the provision, AAX made a loss before interest, taxes, depreciation and amortization or EBITDA of 58.16 million ringgit on revenue of 72.26 million ringgit. Added with the massive provision in the quarter, AAX saw a net loss of 31.63 billion ringgit as it closed the 18-month period ended June on revenue of 1.24 billion ringgit. Minus the provision, the group's EBITDA came in at 411.99 million ringgit on revenue of 1.24 billion ringgit. Its shares rose 5.88% to 9 sen for a market value of 352.59 million ringgit. MRCB says it has received the final award on costs from the Asian International Arbitration Centre, which mediated in the dispute between MRCB and George Kent Malaysia involving a shareholders' agreement dated June 8, 2015. MRCB said in a filing with the bourse, in the final award on costs, the arbitrator has ruled that George Kent will pay MRCB 2.08 million ringgit plus 70,458 Singapore dollars and 50 cents, or about 217,935 ringgit. The shareholders' agreement relates to MRCB GK, a 50-50 joint venture between the two listed companies and the project delivery partner for the LRT3 project. The arbitration had found that George Kent had been in breach of the shareholders' agreement. Now, MRCB must make an unconditional cash offer to buy all of George Kent's shares in the JV company and unconditionally offer to sell all of its shares in the JV company to George Kent at the same price. This is unless the two parties settle their dispute or if MRCB withdraws its notice concerning the agreement breach. The arbitration followed a dispute over the options for securing financing requirements for the JV company, after which George Kent served the notice of arbitration to MRCB in August 2019. At the close, shares of MRCB were up 1.3% at 39 sen, giving it a market capitalization of 1.72 billion ringgit. George Kent's shares were unchanged at 67.5 sen, valuing the group at 374.62 million ringgit.